Tensions are escalating between Russia and the US, with the Kremlin now condemning as destructive a US decision to send extra troops to Europe to support its allies. The Pentagon is sending an additional 2,000 US troops to Poland and Germany. This comes as Russia has recently amassed over 100,000 troops near Ukraine, but Putin is denying he is planning to invade. And now the US is also accusing Russia of planning to film a false attack as a pretext for a Ukrainian invasion. So what does Putin want? What would a Russian invasion of Ukraine mean for the oil and gas markets? And even if there is no military action, what would sanctions on Russia mean for the markets? Well, here to analyze this from the military, political, economic, and financial angles is my power panel. Joining me now, Lieutenant Colonel Harold Kempfer, currently the CEO of GRIP, a global risk and intelligence consulting firm, and Robert Ryan, the Chief Commodity and Energy Strategist at BCA Research. Gentlemen, great to have you with us.
Thank you.
Thank you, Michelle.
All right, Hal, let's start with you. Putin denying he wants to invade Ukraine, but he's flexing some big military muscles, though. And now we have this breaking news that the U.S. is accusing Russia of filming a false attack as a pretext for an invasion. We also know that NATO claims that there's been significant movement of about 30,000 Russian troops and S-400 surface-to-air missile systems to Belarus in the last few days. Russia's been moving tanks, infantry, fighting vehicles, rocket launches. But some analysts are saying, Hal, that it would require more, that Russia would need more troops for an invasion. Putin continues to deny he's planning on invading. From a military perspective, Hal, does it look like Russia is ready for an invasion here?
Michelle, Russia could go in. They certainly have enough troops. They have enough armor, air, certainly all the supporting arms they need in terms of missiles, artillery. So they definitely could launch an invasion. One of the things that I've been looking at is, do they have forward deployed fuel? That's a big issue. Anytime you do an armored attack, and I've done a couple of these, Desert Storm and certainly a lot of things over in the Middle East like Iraq. When you're doing a big push like that, you need to have a lot of forward deployed logistics. You need to have a lot of fuel on the deck. That's the one thing that has not been reported, that they have put those fuel supplies. With that said, recent satellite photos show that they've been pushing a lot of new materials up towards those base camps that they have along the border. So it looks like, they're getting ready. The thing I look at it with Belarusia, and the big issue up there is that's only 2 hours. That's a 2-hour drive from Kiev up to the border there. A armored assault coming down that direction would catch the Ukrainians a little off guard because their forces are actually deployed more towards the east. And whether it's a supporting attack or just having that threat there, it makes the Ukrainians kind of spread their forces a little bit thin.
All right. So, Bob, again, we have Putin denying that he is ready for an invasion. What do you think Putin wants here?
I think the geopolitics of this is Ukraine is his red line, and he doesn't want Ukraine being part of NATO, which I don't think was on the table to begin with. So there's something of a red herring there.
So is the idea then to extort diplomatic concessions? Do you think that he doesn't genuinely want to invade, but he's just flexing some military might in order to make demands from the US and the West, like he has been demanding that NATO membership be denied to Ukraine? Do you think that it's purely about extorting diplomatic concessions?
Don't know. NATO has not offered Ukraine membership, so that's hard to see where that argument finds any support. It's also hard to see what Russia gains in this. They have spent years portraying themselves as a reliable supplier of natural gas. They've gotten Germany to the point where 65% of its natural gas comes from Russia. Any kind of incursion, any kind of disruption from the Russian side would, jeopardize that, marketing campaign, for want of a better word. But it's already, in our view, it's already put that in motion. I mean, they're already establishing themselves as unreliable, and they're already giving the Europeans a huge incentive to diversify their supply of nat gas. They're going to need a lot of nat gas for this energy transition, a huge amount of natural gas. There will be armadas of ships leaving the United States with LNG over the next 3 to 5 years. And that will be, that'll be like a conga line that just doesn't stop. And there will also be Qatari nat gas coming in as a result of this. They're going to undo a lot of market development that they put in motion with this. So it's very hard for me to see what they gain.
All right, so Bob, you say with this, but hell, what is the this here? Because we don't know what this is at the moment. We don't know if this is the precipice of some kind of military action from Russia, or if Putin is just posturing in order to extort some diplomatic gains. So if you were to hazard a guess here, Hal, what do you think Putin's agenda is with this move?
I think Putin is looking seriously at doing some sort of military incursion. Whether he plans to take over the entire Ukraine is another issue. That logistically is very challenging to pull something like that off. On the other hand, doing a border incursion, moving his forces into Donbass, securing a couple of provinces out there in order to secure his main supply routes to Crimea. These are all possibilities. Obviously, the intimidation. When I look at Putin, really what I see is regime stability. He's got a lot of pressure on him. The Russian economy is not in good shape. It still is it's a petro state, essentially masquerading as a major world power. The forces they have only look formidable when you compare it against their immediate neighbors. But in terms of their forces, they're very limited in terms of what they can actually do. And the logistics, that really is the tough part of doing something like this. So I see him using this for intimidation. I actually see the NATO membership thing as something he puts on the table to give him a pretext to do something. As Bob mentioned, membership for NATO is not on the table right now. Ukraine would love to be a member of NATO. On the other hand, we want more regime stability, governmental stability, and a lot of other things, looking at things like public corruption in the Ukraine before we ever think about bringing them in as a NATO state or NATO member. So there's a lot of, that's a much longer play in terms of what he's doing. But I think he's just going to try and get as many concessions as he can. And he might start trading territory for concessions. But I think if he crosses that line, which is going to Ukrainian territory, there's going to be some big sanctions. There's potentially going to be some swift sanctions that he's going to face.
All right, well, we do know that Putin has issued several security demands that so far have been outright dismissed by the West, resulting in this diplomatic stalemate. A Spanish paper published a leaked letter that claimed to show that the latest response to Russia's security demand by the US and NATO was to refuse to acquiesce to Moscow's demand that the Ukraine be kept out of NATO. And now they're saying that, in fact, it went the other way, that the Kremlin needs to end its unjustified buildup of troops at the border. And they've been doubling down the West, that is, in a demand that the Russians get troops out of Georgia and Moldova while they're at it. So if a diplomatic solution isn't reached here, Bob, how do you anticipate this playing out?
I think when you have 100,000 troops on the border, primed, and as Colonel Kempfer said, if you see the fuel start moving in, the market will take notice. Just the pure response to that provocative kind of action probably would take crude above $100. And we're at, we recovered and we're now back to $91 on Brent right now. This market's extraordinarily tight. There was a Nigerian tanker or oil processing ship that blew up off the coast of Nigeria today, just a couple hours before we went on air here. And when we get even the slightest disturbance in the force, as it were, you see these markets spring higher. I mean, they're just primed. And a big part of that is the very low inventories globally, very high demand globally, and very constrained supply globally. So something that looks like they're rolling the tanks more than likely would just make the market jump, with or without good reason. The market is just that prime because it's so tight.
Right, but in the event that there is some kind of military action by Russia, and hell, as we said, the U.S. accusing the Russians of trying to stage some kind of Ukrainian attack to justify action on their end. If there is some kind of military intervention from the Russians, how likely is it that the U.S. and NATO allies respond with a military reaction?
Well, it depends on how you call what would you call a military reaction. What we would respond with is probably pushing a lot of arms and other things to the Ukraine, whatever territory the Ukrainian government forces control, to help them. I don't see a scenario where any of the NATO partners would actually put military forces into the Ukraine. With that said, we have trainers right there. We have military trainers in Ukraine currently, and I imagine we'd be pulling them back. One of the things that's kind of missed with this is it's not just the forces, it's the other things that we bring to Ukraine. We can provide them with intelligence, intelligence, surveillance, reconnaissance. We can provide them with a degree of situational awareness and understanding they wouldn't have. The other thing is, and I don't know if we're doing it, but I'm assuming we're doing it, is we're probably helping them develop the defensive plan for Ukraine. I would imagine that somewhere there's at least one joint planning group, if not multiple coalition joint planning groups, looking at maps, looking at the latest satellite photos, figuring out where the Russians are, looking at the land, and coming up with this very extensive plan with counter-mechanized kill zones, fire sacks, whatever you want to call them, ambush sites, reinforcing those with anti-air ambush sites. So when they take out tanks and the Russians call in air, they take out air. This gets into all the tactics of how you do this stuff. And I've spent many years of my life out there doing these things, but I would imagine we're doing that and building a very strong defensive plan for the Ukraine, which will cause attrition of Russian forces. So and Putin has to know this. He has to know he's not just going up against Ukraine forces. He's going against Ukraine forces with the best thinking of NATO and the United States helping them, and this intelligence to give them awareness of where the Russians will be at any given time. That is a big stick, and that's something you need to be aware of.
But Hal, you don't see a scenario, or perhaps what is the likelihood of a scenario where you actually have NATO forces getting into a military confrontation with Russian forces, which then by virtue of Article 5 pulls in the US? How likely is that?
That would require a Russian strike, either on NATO territory, on a NATO country. One of the things we're looking at right now is the Black Sea. We're looking at something down there in the maritime domain where you could possibly see navies possibly getting into some sort of confrontation. And if you listen to what Erdogan said today in his discussion, where he said, I'm going to, kind of interface with Putin on this issue, he made a very interesting statement. He says, that he recognizes the absolute criticality or absoluteness, I should say, of Ukrainian sovereign territory to include Crimea. Now, he didn't have to add Crimea to that last part, but he said that. At the same time, they're going to start building these kamikaze drones, as they call them. There's some very, very good Turkish drones that have this loiter capability where they can just fly over Russian armored forces. And then if they see a good target, go in and take them out. This is very substantial in terms of the type of warfare that we're seeing. And we saw when this happened with Azerbaijan, how it completely changed the force structure by doing things like this. So I think Turkey may actually play a big role. And if there's a Turkish naval confrontation with Russian forces somewhere in the Black Sea, I don't know where that would go. I really don't. It could be an Article 5 situation. So it's possible.
Okay, that unless there is a clear strike on a NATO country or on NATO military facilities or military assets, you do not see the US being pulled into a military conflict here with Russia.
No, I don't. And I don't see any of the NATO partners want to do that either, particularly Germany. So, yeah.
All right. So it sounds to me, Bob, as though we've got three scenarios here. We have a scenario where Russia continues to do nothing, just posture aggressively. That in itself leads to some kind of, diplomatic stalemate, which is already having an impact on oil and gas and other markets. Or we can have a scenario where Russia goes into the Ukraine and the US and allies respond with sanctions, which of course will also have an impact on certain markets. And you have the third, but least likely scenario where Russia does, in fact, get other NATO members involved, which then pulls in the US into some kind of military conflict. So, Bob, if you will, I want to break down what those three scenarios mean for the markets. If in the case of scenario one, this diplomatic standoff just sort of continues and is extended, considering that, as we know, Europe is dependent on Russia for much of its energy needs, about 35% of the EU's natural gas comes from Russia. How have these tensions already impacted oil and gas markets? And even if they just continue at this current state, what do you anticipate?
I would imagine that the risk premium in European natural gas prices will stay embedded. And that is, that's going to be the case as we finish the winter out in March, April, thereabouts. And throughout the rest of this year. Europe has drawn down its natural gas inventories at an incredible rate. They're somewhere around 35% of capacity right now in their gas inventories. And at this time of year, they should be above 50%, if everything was working the way it should be. And they're going to be scrambling like crazy to refill those inventories going into next winter. So it'll keep the prices more than likely very well supported, and we'll keep that risk premium in there, because as long as there's this maneuvering on the border, by Russia with Ukraine, the market is always going to price a higher probability of a very bad event than is probably warranted. But the reason they do that is because the stakes are so high. It's like Pascal's wager for natural gas, and that's what's been going on right now. If you get some diplomatic resolution here, what's more than likely going to happen is things quiet down, but the Europeans are going to look to diversify their supply sources. And this is an opening. Biden is out there as the chief marketing officer now, lining up alternative sources of supply down the road. I mean, there's nothing they can do now. There's probably nothing they can do within the next year. There's a lot they can do within 2 or 3 or 4 or 5 years in terms of getting alternative supply into Europe and building out that infrastructure. So somewhere between those two things is where we finally settled down. But I think regardless of what happens, the Russians have really damaged their position as a reliable supplier, and that does not go away. So they're going to have to figure out how to deal with that.
All right, Bob, I want you to break down the second scenario for me, which is Russia does make some kind of incursion into Ukraine, and we've seen them do it in 2014 in Crimea, so it's not beyond the realms of possibility here. And then the US and Western allies respond with sanctions. What does that look like? Which sectors are impacted by that?
I think the sectors most impacted are oil and gas production. But what's really interesting, following the first invasion of Ukraine, where they took Crimea, Russian production actually went up year on year from, I think it was 2014 to 2015. The incursion occurred in 15. They annexed the Crimea, and in 15, oil production was actually up year on year. And they were doing a lot exporting their natural gas. They were sanctioned for that. They lost access to Western technology. They lost access to Western capital. And now they find themselves in a position of finding it very difficult to maintain their oil production, their oil output at 10 million barrels a day. So just recently, we've had to downgrade our estimate of what Russia would be contributing in the OPEC plus restoration of supply, because it doesn't look like they're able to meet their quotas every month. They're pretty much flatlining at 10 million barrels a day now. If they are subjected to another round of sanctions, again, on technology and capital, they more than likely will find it increasingly difficult to restore production and grow it, which is their long-term goal. Right now, they've amassed a pretty good war chest. They're big buyers of gold. They've been saving up, this windfall that comes from these high prices, so they can probably get through, the early stages of the sanctions. But if they're really severe and they are prolonged, they're going to feel it, and their capacity to increase their production of oil and gas is going to be at risk.
Do you have any price points that you've modeled in the event of the sanction scenario? Do you have any projections for where you see oil, which is already at a 7-year high, going if, again, Russia does make a minor incursion, as Biden called it, into Ukraine, and the response is sanctions? Give me some of your price projections for this scenario.
Sure. I think if it's a minor incursion, which I think is what people are talking about now, so they only incur minor sanctions, whatever that trade-off looks like. The initial incursion probably does spike prices. The market will react, oil and gas. Once things settle down, we'll probably come back down, around to the 85 to 95 barrel range. A lot of this is going to depend on how much of an excursion and how long they're in country, and what they do to unwind that. If they're really intent on just making a point and then getting out, this could be short-lived. Otherwise, it could drag out. And then what will happen is you'll get the Saudis and the UAE primarily to tap their surplus capacity and bring more oil to market. And you'll probably see a big increase in U.S. shale production. So oil will get to the market, but it will take time, to put ships on the water and get it to refining centers.
And beyond oil, how do you see other markets reacting?
We'll continue to see a lot of volatility in natural gas in Europe. And that in and of itself gives you very high prices. So you have a potential to spike higher, which is always there, and an incentive to sort of hang on to your inventory tighter than you would. That immediately feeds into other markets. You saw this past winter in Europe, aluminum and zinc smelters were shut down because the price of electricity generated from natural gas or other commodities that were impacted by the spike in natural gas prices became too expensive for these guys to run their refining operations for aluminum, zinc, that sort of thing. And they shut those plants down. So that tightened an already very tight base metals market. You're also seeing the incredible run-up in nat gas prices feeding directly into urea and ammonia markets, which is critical for fertilizer. 70% of fertilizer is nat gas. So our expectation is we see food prices really going up going into this year. Can you give me some specifics here in terms of which prices of which commodities to what levels? Do you have any specifics? Sure. The grain markets primarily would be affected. And I think the bean markets, so soybeans, so corn, wheat, rice. Colonel Kempfer mentioned that, I think, or maybe I just read it, it all folds together. Ukraine is a big exporter of corn and wheat. So you'd see more than likely the invasion triggering a market disruption in those grain markets, and you'd more than likely see natural gas prices going higher. So you'd have constrained supply on corn and wheat. You'd have much higher natural gas prices, feeding into higher fertilizer costs, and voters starting to complain in Europe and elsewhere.
And, we've had guests on the show, I believe it was Anthony Scaramucci, who actually made the point that China, of course, is watching this very closely, and that U.S. equity markets may respond very strongly to the downside if there isn't a strong enough pushback against Russia, because it may signal a green light for China to perhaps take some aggressive action against Taiwan, which then impacts a whole other sector, particularly the tech sector. I'm going to have Hal dig into that one, but I just want to play out the third scenario here with you, Bob, and that is that there is a military incursion, that a NATO target is somehow hit, that NATO does become embroiled in this conflict, which then draws in the US potentially under Article 5, which is an attack on one NATO member is an attack on another NATO member, which means that the US would need to step up and defend that member. So in that event, if things do spiral, because, in war, things can get out of hand. If things do spiral like that, Bob, what do you project happening?
Typically what happens in that scenario, and I'm thinking back to 1990, jet fuel, the jet cracks. So jet fuel prices just skyrocketed because the military now needs a lot of that. The carriers are going to assemble, the air bases around Europe would be pulling down on their jet fuel inventory. So we would look to see that. That would feed into crude oil markets, and crude would probably go higher. Gasoline and diesel prices would move higher as well as you started, responding to this and mobilizing your own hardware. So I think the first response there would be in the oil markets and refined product markets, jet, diesel, gasoline.
Hitting what kind of levels here?
I could easily see it going over $100. I was trading oil when the first Iran war or the Iraq war hit, and it would just depend on the response. I think if it really came down to it, it would look a lot like that. And Harold Kempfer, you're better suited than me to talk about this, but the U.S. and NATO are formidable, as a military force. If it came down to that, I think it would be over very quickly. So you'd get a big spike in fuel oil prices, and then it would come down exactly as happened in the 1990 Iraq war. The caveat there is that we're living in an age of cyber warfare, so it would not be at all surprising if Russian subs start clipping all the cables, leading into Europe. So the internet shuts down. You have some big cyber attack that takes down the electric grid. The NATO and the US would be compelled to respond, and you just worry about things escalating. So, and to that, I really have to emphasize, I defer to Colonel Kempfer on this.
All right, let's bring in Lieutenant Colonel Hal Kempfer to weigh in on a number of the points we just made. But we'll start off with this doomsday scenario that we're touching on. Hal, again, the probability of this happening, what would you cap it at?
I put the probability as fairly low. And if it did happen, I think you would see great restraint on our side and NATO. Whether it be some sort of limited retaliation, I don't know. But I can tell you right now, if something like that happened, there would be a full court press on Putin to dial it back. Because once he crossed, that's a line he just can't cross. As Bob mentioned, NATO, the U.S., we have tremendous military means, and they just can't survive that sort of confrontation.
I'm going to challenge you there a little bit, Hal, because we've had the Obama administration tell the Russians that there are certain red lines that they cannot cross in Crimea and in Syria. Those lines were crossed, and the consequences were negligible at best. So would Putin really be restrained by that idea?
I think the NATO side would. One thing I've been watching very closely with this is, obviously we saw with the 3,000 forces being pushed to the east. We have been reinforcing our presence in Poland, in the Baltic states. One of the interesting things that's come out of the whole Ukraine situation is that our NATO commitment across the board to defending those states has never been stronger. Our commitment of forces on the ground have never been stronger. So if he does something like that, there's a huge tripwire issue, which is he could end up killing, U.S. forces, British, German, we're all in there, French, across the board. One of the things with the Baltic states is each one of those states has this reinforced battalion. It's an international battalion. And different NATO countries, even Germany, takes lead, and France takes lead. It just depends. But they're an international battalion. They are there specifically to make sure if there's an attack on any of those countries, same thing in Poland, it draws in everybody in NATO. It basically has a stake in it. So in that situation, that's a red line. It's also a red line that's an international treaty. And I think, the Poles and certainly the Baltic states, and if you want to go further south, down to Romania and stuff, they would all sit there and say, look, you have to do this. And I don't think we'd have any choice. We get pulled into it.
So, Hal, which scenario do you think is more likely to happen here? Is it one that the diplomatic solution is reached with the U.S. and the West giving Putin some pretty serious concessions, or that Russia does make some kind of minor incursion into Ukraine, which many believe President Biden kind of let slip up accidentally, that would be somewhat tolerated? He has, of course, since backpedaled those comments. But let's assume that it is a minor incursion and then the U.S. And the West slap some sanctions on Russia. Do you think that is the most likely way this plays out?
I think the way it really depends on what we offer them. There is right now, according to that leaked memo, that we're talking about reciprocity and looking at missile sites. And that's so that we don't have offensive Tomahawk missiles at these Aegis defensive sites, that they can see those, and then we can see a couple of their sites to be named, that we could also, that's okay. I don't know if that's enough of a political win for Putin right now. He's looking for a political win. He has to have a significant way to save face to pull his forces back.
Right.
And I know we're trying to work that. There are limitations of what we can do. Telling Ukraine that no, you can never join NATO, that's not going to ever be on the table. But there's a lot of maneuver area, if you will, within that. We could reinforce that Georgia, for example, is not going to become a NATO member very soon, which is pretty logical inference. That Moldova will not become a NATO member anytime soon, which is a pretty logical inference. So we could give him some things that he could point to in that regard. I think if things are going right now, there's a very good chance that he will possibly cross the border. And I think the sanctions will be crippling. I agree with Bob. Initially, you might see this huge surge of Russian nationalism and a lot of support, for what Putin's doing. But when you start shutting down the bank accounts and seizing assets of the oligarchs, if you take Russia out of the SWIFT system, which really financially cripples Russian companies and the Russian government, and by the way, it is a double-edged sword. There are some other things this does in the commodities market. We saw this when we tried to do a more limited version at one oligarch close to Putin. It ended up spiking global aluminum prices to the roof. So we got to be a little careful on how we do that. But there's a lot of things we can do to bring that back. If I can say this, though, if there is an incursion, one of the things we're going to see, and I do a lot of consulting in the maritime security space, we already saw this surge of LNG tankers going up to the Atlantic, to North Atlantic, from all over the world, getting ready for this. I kind of call it like the Berlin sea lift. It's really this LNG sea lift thing coming from North America going over there. Australia has stepped up, saying, they're a huge natural gas producer, saying that they would increase their production of natural gas to make up that. That gets into some critical choke points around the Red Sea in terms of moving natural gas. So one of the interesting things is the maritime side of this. And Russia has done, as Bob mentioned, they have done things where they interfered, at least we think they did, interfered with the international cables. And if you've ever looked at that thing, it is a nightmare from a security standpoint. If they go in there and start doing some underwater clipping, cutting, whatever of these underwater these cables, we're not going to sit there quietly and just let that happen. And I see the possibility of a maritime engagement possibly drawing us in that way. That one really concerns me probably more than a lot of other scenarios.
If the Russians go and try and sabotage some of the deep sea wires that are so vital to so much of our connectivity, you think that is the more likely military action taken by Russia, that would then pull in a very serious response from the US and allies?
I think we'd be in a tough position. For example, if they started cutting cables around Europe, we and our allies are really on the hook to go protect those cables. The chances of an underwater confrontation between naval forces gets really high when something like this goes. It really is strategically, it would not be a bright thing for Putin to do that.
Yeah,
but
I was going to
stuff like that.
Yeah.
So,
I was going to say Putin would know that the consequences for that are very high. Hell, because you're an expert of many things, not just military, I know that there are some other commodity markets that would be impacted by the second scenario, which we said is the most likely, and that is a small incursion followed by sanctions. So what kind of sanctions would you expect, and what kind of reaction would you expect from various commodity markets? Hell?
Well, one of the commodity issues I look at is nickel. If you look at around the Murmansk Peninsula, it's into ancient history, an asteroid hit up there with a lot of nickel. And so there's a tremendous amount of nickel that Russia exports. If you look at the, one of the reasons that Germany is so dependent on Russian natural gas is because they got rid of the coal-fired plants. Then after Fukushima, they said, for political reasons, we're going to get rid of the nuclear plants. Well, the gap is being filled with natural gas. They want to go to renewables. Renewables imply that you need a lot of batteries. Batteries require things like lithium and nickel and cobalt and other things like that. Russia has a corner on the nickel market, particularly in Europe. I think it's about 80% or something they provide nickel to Europe. That's huge. And in the rechargeable battery space, which is huge for Germany because that's the direction they're going, they could literally cripple the rechargeable energy space by cutting off nickel. Or a confrontation could cause nickel to be cut off. That's just one. There's other things, and I defer to Bob on this, other things in the minerals market where they have an unusual position just because of what they have within Russia. And I think it'll be very disruptive toward the metals market across the board. But that's just one that jumps out at me in looking at this.
Well, it sounds like Russia is in a position of strength here if it controls such a large chunk of the nickel market. We know it's the world's biggest exporter of natural gas as well. So it's curious to think if Putin may actually weaponize this dependency to get Russia's way here. Speaking of metals, Bob, with all of this geopolitical uncertainty, what do you expect from gold?
Our target for gold is $2,000 this year. And we're trading something around 1,800 right now. So we're pretty bullish gold. If we saw, this, kick into high gear, we'd probably get a rally, but it might be limited. The two great risk assets, the safe havens in the world, are gold and the US dollar. If it looks like people scramble to bid up the dollar and have that increase their dollar holdings, that will be a constraint on gold price rallying. Normally when the dollar is falling, gold is rallying. We had an instance during the Trump administration when gold and the dollar were rallying together, and then the dollar finally broke away and continued its rally, and gold fell off. I think gold would it would catch a bid. I think that, there would be a scramble to get it, but at some point, depending on how bad things got, you'd see dollar strength limiting the rally. So we'd go through $2,000, but I don't know how far through $2,000.
All right, so Bob, you're saying because gold is priced in dollars and because of some certainty, would lead to a higher dollar, that would cap gold's gains here, despite massive geopolitical uncertainty. But I want to put this idea out there to both of you. If there is an incursion, and if the US is seen to not respond in a sufficiently strong and deterrent manner, and it brings into question the US's status as a superpower and the role of the dollar as the global reserve currency, with China watching every single move here, is there a scenario where this actually brings the dollar down because the US, depending on, of course, on its response, does respond in a weak way? We have seen that the Biden administration has no appetite for confrontation, and we have seen what many have interpreted a big signal of weakness from the Biden administration during the Afghanistan debacle. So if the US doesn't position itself in a suitably, shall we say, aggressive manner in response to this, Bob, do you see a scenario where the dollar becomes weaker as a result?
That could weaken the dollar. I don't know how much by, but it would weaken the dollar, because you'd see markets begin to question the value of owning assets in the reserve currency, in the most stable, central banking system in the world. So that would be, that would be bearish. It was. I don't think the dollar reacted negatively when Obama backed away from his red line in Syria. I'm trying to remember what happened there, but given the stakes now, and given the fact that China would benefit mightily from something like that, it's a different game now. So we would have to see. I'd have to crank up the cray there, Michelle, to work on that one.
All right, let's think about that one. And Hal, given the fact that the dollar is backed by the full faith of the US government, which is backed by its military might, if the US fails to show military might in a big confrontation like this, what would you think could happen to the dollar?
Well, I think I would agree with Bob's assessment on that. I would hope that wouldn't happen. I think there's some domestic political constraints that President Biden would face if we didn't have a strong enough response. We're in the midst of a midterm election, and it's not looking good for the Democrats on that one. And I think politically he would feel pressure to have a stronger response, for fear of what that could do with the midterm election, and certainly fear of what it could do with the 2024 election. In looking at this from that standpoint, it reminds me a little bit of what President Carter faced with Iran. That literally dragged down his presidency, and a weak response to the Ukraine situation could have that same political dynamic. So just as Putin is somewhat constrained or empowered by his domestic politics, I think we have some of those same restraints and constraints in terms of how we respond to whatever happens over there. So that's something I think about.
All right, that is another excellent point to think about, and something else that I would like you both to weigh in on from a political perspective. You both discussed this idea of alternative sources of energy for Europe. And the Biden administration has significantly diminished the US's ability to fill that role, the US's capacity to produce oil and gas. The Biden administration has curtailed the energy sector with its punitive policies, including shutting the Keystone Pipeline in the very first week of office. And at the same time, of course, is approving the Nord Stream 2 pipeline between Russia and Germany, making Germany even more dependent on Russia, as we see as a factor here. But the US had a booming shale oil and gas sector. The US was energy independent. And now the Biden administration has put the US in a position where it's begging OPEC to increase supplies. So is there a scenario here, Bob, that politically speaking, you may see this dynamic with Russia and the Ukraine impacting these policies in the US fueled by the Green Movement, and that the Biden administration now sort of reassesses and backs off what some have called its war on the oil and gas sector?
a hugely important topic. I mean, this is hugely important. I watched an interview with James Baker, HW's Treasury Secretary and Foreign Secretary. When you can't drive your car, when you're freezing in your home, nobody's going to want to hear about, how you're going to, shut down oil and gas in order to make way for renewables. The way the world is situated right now, the supply of the metals required to pull off the transition to renewable energy already is in a physical deficit. Mm-hmm. So we're starting off on the back foot, trying to get this whole thing up and running. The price that would be required to incentivize the development of new supply, we're going to have to double the supply of copper between now and the end of 2030. That's just 8 years now, to start meeting some of these goals. The metals markets, the oil and gas markets have seen a dearth of capex. It just hasn't been there for the past 7 or 8 years. So, you're not going to get anything done without oil and gas. Shutting it down will just mean that you shut down your economy. And the Democrats realize that. I think the Republicans realize that. They're trying to figure out a way to finesse it. So even in Europe, you have the same issue. They're arguing right now. And I think there was a decision, I haven't had a chance to find it yet, including natural gas in the financial taxonomy for the renewable energy transition. Our expectation was that was going to be approved, and natural gas would qualify for funding under the evolution to the renewable future, or the low carbon future. So that would mean state-supported funding, for the development of natural gas. Reality will intrude, so it might be a messy process on the way, but it will intrude. And it's also, it's redrawing a lot of diplomacy right now. This past week, Biden declared Qatar a non-NATO ally of the U.S. Qatar is I think the second largest exporter of nat gas. And I think the U.S. this year is going to become the largest exporter of natural gas via LNG and via pipeline, to Mexico and Canada. So you're seeing a resource alignment around these, diplomatic military alliances now. Qatar is going to play an important role in that, and they're going to be enlisted in getting gas to Europe. They'll be part of the dismantling of the Russian franchise there, or the weakening of it, not dismantling it entirely.
Okay, and Hal, final thoughts from you. Do you see this scenario with Russia highlighting perhaps that the Biden administration has been too aggressive with shackling the U.S. gas and oil energy sector at large, and that it may potentially cause a rethink, or is the green movement from the left just too powerful politically at this point?
I think what will happen is, from a national security standpoint, it's going to curtail some of this green movement, if you will. I've spent some time working in security issues, homeland security, if you will, in western North Dakota and eastern Montana. And I've had a chance to look at the shale oil situation up there. I have to tell you, up in that area, there's probably some joy right now, because they're going to see a resurgence in terms of their economic situation. But what I see is that we're going to have this huge push on LNGs, and there's going to be a big push on maritime. One of the things that's going to do is you're going to see a lot more natural gas production, more investment, more capex going into natural gas production in North America to supply Europe. The other thing you're probably going to see is you're going to see a lot more shipbuilding, obviously LNGs across the board. I don't know if that shipbuilding is going to go to China. That's another issue. That may be another security issue consideration we put in there, because a lot of it had been. But you're going to see that. And then again, you get to those critical choke points, Persian Gulf, Red Sea. So you're going to see probably a much much larger naval presence at these checkpoints. You're probably going to see greater engagement with checking Iranian influence, particularly on the water. Because if we're pulling all that LNG, I mean, some of it can go across Saudi Arabia, and there's pipelines that support that, but for natural gas, not LNG. But a lot of it's going to be tankerized, and it's going to have to go through those, a couple of major choke points there, which are maritime security challenges. And so there's a lot of moving parts on this with that. But you're going to see a maritime force presence. You're going to see more LNG force presence, and I think you're going to see a lot more capital expenditure in producing more natural gas from non-Russian sources. So in some sectors, this will be very positive. If I was in Australia right now working in this, I would probably be pretty joyous. I'm not saying they're praying for war, but they might be looking at this saying this could be a real opportunity. So
Bob, I'm going to put it back to you. Who does benefit from this? If you're trying to play the markets here, and of course every crisis presents an opportunity, how would you position yourself to benefit from the scenario that we've discussed is most likely, and that is a contained minor Russian incursion? What is the best way to position yourself from a portfolio perspective to take advantage?
Right. By the way, that is our call as well, our geopolitical group. And I think you've had Matt Gerken on your program. That's yes, Matt's call as well. He gives that 75% odds. So we've been recommending a couple of things. I don't take views on individual companies. I like sectors. So we've recommended getting long the oil and gas producers via the ETFs. This is a decade-long, if not more, process that's going to unfold as the world transitions to renewable energy, and it won't happen without oil and gas. We've also recommended getting long the metals producers. So, that both in North America, heavily North American metals producers, as well as down under, the Aussies, they are going to benefit. And again, this is a decade-long play. There are, tactical things that you can use. And we've recommended getting long commodity index exposure, which benefits from the very types of markets we have right now, which are very tight. In the vernacular, we call that a backwardated market. The prompt delivery commodity is trading at a premium to the deferred delivery. That is the source of roll yield. Those are our favored positions as well in our estimation. So those are the big ones: the long commodity index exposure, the broad-based ETF type exposure to metals producers as well as oil and gas producers.
All right. Well, Bob, thank you for sharing your estimations and your positions with us, as well as your analysis at large. Really appreciate it. Bob Ryan and, of course, Lieutenant Colonel Harold Kempfer, always a pleasure. Thank you for joining us. Thank you for your service. Appreciate it. And thank you for watching. Keep it on Kitco. I'm Michelle Makori, coming to you from New York.